Hello, welcome to the Off-Highway Global Briefing organised by Off-Highway Research. I'm Chris Slight, Managing Director of Off-Highway Research, and I'll be your host today. In this webinar, we'll be looking at Off-Highway Research's new data update, which comprises actual figures for 2020 and our revised forecast to 2025. The other speakers in today's presentation are Samir Bansal, Off-Highway Research's General Manager in India, and Xiang, our Director of Research in China. They'll give detailed presentations on their respective territories. Now, due to time difference and bandwidth concerns, they'll not be joining us live, and those presentations have been pre-recorded. But we hope Samir will be able to join us for the Q&A session at the end. And of course, if you would like to ask questions on any of the material in today's webinar, please post them in the Q&A channel, and I'll get to as many as the time allows. I'd like to take this opportunity to thank our sponsors, Carlisle Brake and Friction and OSA, whose support have helped make this webinar possible. Thanks also to our media partners, International Construction, Diesel Progress and Diesel Progress International magazines. Finally, thank you to all of you for attending and investing your time and money in watching this webinar. I hope it proves valuable to you. Following the webinar, we'll make a recording available along with the slides and a report discussing the key points. These will be made available to attendees on an exclusive basis, and we'll email you a link to download those documents and files as soon as they're available after the webinar. So without further ado, we'll begin the presentations. And before we get into the picture for individual reasons, I'll set the scene at a global level. So just before we get started, for those of you who are familiar with off-highway research, this is just a short list of the types of equipment that are included in this presentation. You probably all have slightly different measures of the market. So when I'm talking about the global market, it's these core types of equipment. And when we dig into different regions, there are other types of equipment that are included as well, which are kind of more important in those regions. So what's the global situation? First of all, and I'm sure you're all aware, it is a cyclical market. And what we saw in recent years was that demand had peaked in 2018 and 2019, record volumes of about 1.1 million units sold with a retail value of 110 billion US dollars in each of those years. Prior to COVID, we were expecting a downturn in 2020 anyway. That peak was quite well sustained, and it was quite clear that the market would cool down a little bit in the following years. Now, what has been absolutely surprising is that the decline we've seen last year was actually less than we expected before COVID. And that was due entirely to the early stimulus spending measures that took place in China. So on a global level, COVID arguably had a positive impact on the global construction equipment industry. And looking ahead, of course, we're starting to see a rebound in markets that started in the middle of last year. But that rebound in the markets outside China, with the continued buoyancy in China, raises the very realistic possibility that we'll have a record year for construction equipment sales in 2021. So let me just illustrate that for you. As I said, this was the situation that we saw in the markets late 2019. We reached this point, the market's coming down off a peak, and we saw a gentle soft landing for the markets. What we've actually seen, our actual figures for 2020 showed no decline. And as this rebound comes, we could hit this record of about 1.13, 1.4 million unit sales. As I said, in the last year, that's been all about China. So let me illustrate that for you. The market had peaked in 2019. We felt at the time, and we were expecting about a 9 or 10% decline. As soon as China came out of lockdown, just about a year ago, there was enormous stimulus spending. And as a result, the market in China grew a staggering 30% last year. We see that growth continuing to some extent, certainly in the first half of the year, and it could take things to a record volume in 2021. And certainly the market is comparable to what we saw in 2010 and 2011. I think the point is, and something we will discuss, is after 2011, we saw this very deep and prolonged decline in China, which was very damaging for the industry. We are, of course, forecasting some downturn in China, but nothing like what we saw before. And we'll go into the reasons for that, or rather Xiang will, in the China segment. So that's China. China's what's made the difference in the last year. If you look at the world outside China, again, pre-COVID forecast, we were expecting a soft landing, 4 to 5%. What we actually saw overall was a 12% decline in these markets outside China. So yes, clearly worse than would have happened. But I mean, I think if you look at the cyclicality of the markets, 12% decline is not, too severe, not too out of the ordinary. It's certainly nothing like the impacts we saw following the global financial crisis. And also the point I would make, the kind of volume that we landed at in 2020, about 650,000 machines, is actually not that bad in the historical context. We're still above this very weak period that we saw in the early 2010s. And there aren't many occasions in history when the market has been that high. And again, as I said, with a bit of a rebound coming, those volumes should stay reasonable. So that's the sort of very high level view on an annual basis. One of the things I want to say, just as a way of kind of zooming in a little bit more closely, is just look at what the industry has been doing. And this is something that we've picked out of the financial reports that are published by manufacturers in this industry. We found about 20 major international OEMs across Europe, North America and Asia, which are stock market quoted. And if you aggregate all their sales and look at the profit margin, you get this kind of quarter by quarter picture. So going back to 2014 on this slide, you see the decline, and then the way the cycle came up in 2017 and peaked in 2018 and 2019. And this here is the fourth quarter of 2019, where you started to see sales start to head down. So as I said, at that point, we were expecting a downturn, but a soft landing. What we saw in 2020, of course, was quite steep falls in the first and second quarters. But things really turned a corner in terms of not only sales, but also profitability in the third and fourth quarter. And we saw this really quite strong rebound beginning in the middle of the year. And that's something which we feel has continued. So that is the brief global overview, and I'll return to the global picture when we talk in more details about forecasts. But with the scene set, we'll move on to China. And that, of course, has been the most striking market over the last 12 months. This is covered by Xiang, who has 20 years of research experience in the Chinese construction equipment industry, which began in 2000 when Off-Highway Research launched its first study on the Chinese market. He joined Off-Highway Research in 2003 and is currently the Director of Research. He leads our Chinese team, supplying our Chinese service and Chinese database service. So let's get Xiang up now.
Hello, I am Shi Yang from Off-Highway Research China. With our 20 years experience in the study on China, we are now seeing the Chinese market moving towards the second peak of sales, with an annual rise of 30% in 2020. In the meantime, we also see significant change in the market structure, featuring the rise of excavator sales and the growing contribution of compact equipment. Looking back to the history of the last 10 years, China has experienced a complete cycle of a deep fall from the highest record in 2011 to a recovery to the second peak. This has been driven by the steady demand from the construction industries, but also the replacement of old fleets that are not able to meet the contemporary requirements for environment protection. New demands for compact equipment also made an important contribution in the current market boom. The market is now set to be adjusted to a downturn, although it may continue to grow to a new record in 2021. But generally speaking, it will be moving at healthy levels. The structural change of the market has seen the share of excavators increase to over 60% of total market, while wheel loaders now took only 22% in 2020. Within the excavator sector, mini excavators increased the share to 34%, while the demand for machines over 18 tons are primarily driven by replacement. Production has driven even faster than domestic sales for the last 5 years, obviously for the export contribution. In 2020, the production in China accounted for over 50% of the global industry, and this has caused serious stresses on component supply. To analyze the reason for market boom, the government stimulus input for balancing the impact of COVID-19 has certainly played vital roles in sustaining the demand. The infrastructure programs, renovation projects, and rural development were fueled by the increased public budgets. Very importantly, the replacement of the old fleets has been accelerated by the upgraded environment legislation and encouraged by the fast-falling machine prices. In the new year, the market has continued to grow buoyantly on the year-on-year basis, but the annual trend will depend on the fine-tuning of the macro policy. Part of the future demand has been overdrawn by the price competition, and therefore the market is now on the edge of downturn. In the light of the rise in the demand for small machines and the continued replacement demand, the market may not repeat the deep fall during the last cycle, but the industry is faced with the pressure of consolidation for squeezed margins. In 2020, the industry also enjoyed good exports, which rose to 82,000 units, although the share of the production reduced to 40% for the even faster rise of the domestic sales. It should be noted, however, the international manufacturers played 40% of the total export during the year. Given the great potential of the emerging markets, the Chinese export may continue to grow, for which the investment from China should help. But it remains a question if the Chinese manufacturers are able to repeat their success at home to the international market.
Thank you very much for your presentation, Xiang. I think the first thing I'd like to ask is, people like me who've been following the Chinese market for a long time have seen so much new infrastructure built in China. One wonders what there is still to be built. So in this last boom that we saw in 2020, what were the kind of projects that were coming to the fore and demanding all the equipment?
Yeah, after such a very high growth, exceptional high growth in the market because of the government stimulus, we are now seeing the market is on edge of an adjustment to downturn because of the overdrawn demand during this period. Looking back to 10 years ago, when our market moved to the last peak in 2011, at that time, to cope with the impact of the global financial crisis, the Chinese government input lots of investment stimulus, and the market was driven to an unprecedented high during that year. And after that, the government went into a deliberate campaign to mitigate the financial risk for the country. So we have seen the market demand for equipment suddenly fell, and the sales of the machines went down year on year till the first half of 2016. And after that, the market began to pick up because of two reasons. First one is the government started again to increase the investment into infrastructures. The real estate market kept healthy, and even more importantly, the government imposed a much stricter control on the environment. So the replacement of old fleets was encouraged because of that reason. So we have seen this cycle of growth combined the new demand, but also the replacement of the old fleets that went into the market 10 years ago. So it's a different reasons for the growth than 10 years ago. It's a complex combined reason for this growth. And looking to the future of the market, we see because of the very fast falling price of the machines during the last 2 years, the replacement of the machines were encouraged, and so the market was overdrawn by the very fast sales. So we see the market is is now at point of adjustment to a downturn, but we do not expect the market will see a very fast, very sharp fall as we saw in the last cycle. The reason is that the replacement demand due to the environmental control will continue until the enforcement of the China Stage 4 in the end of 2022. And after that, we might see further replacement of the China 3 machines. If they, because the Chinese company now announced they will continue to upgrade the environmental control to balance the impact on the environment. So that will still be a very important drive to the market. On the other hand, there will be some new demand for compact equipment, and the renovation and maintenance of the existing facilities will continue. So, and we expect market will still be driven by the not very high growth, but stabilized government input of investment into the different sectors. So that's we see the market will move for a adjustment, but not a deep fall in the next 5 years, and it may return to another growth maybe in 5 years. So it will depend on the economic policies.
Sure. It's interesting because I think as an outside observer, you would look at the peak that's arrived in 2020 and which is still growing this year, and they're incredible sales numbers. But you would also sort of start to think, hang on, we saw this 10 years ago, and the 5 years after that boom was a very difficult time for the Chinese industry. So it's very interesting to hear your thoughts on, yes, of course, there'll be a downturn and an adjustment. It's a cyclical industry, but it's very interesting that you don't see the same sort of sudden and deep downturn that was experienced in the past.
Of the last campaign for deliberating the economy, the Chinese government now, I think, holds a much better control on the investment activities. They do not allow flooding of the money into the market, but they keep the certain capacity to make investment. So that's the difference, something different from 10 years ago.
Sure, that could be very important.
Yeah.
Another thing that you touched on there, and also in your presentation, is the way the structure of the market has changed. You know, traditionally, China was a very big wheel loader market, and now it's moved to crawler excavators and a staggering number of mini excavators. Is that something that you feel is sort of indicative of a change in the Chinese construction market, a new maturity where it's moving from this phase of new build that we've seen in the past to more sort of repair and maintenance model that requires compact equipment?
Yes, that's correct. The Chinese industry, they have done lots of works in building new facilities, infrastructures, house buildings, and everything. And yes, we have done so much for the construction now, and we have to maintenance them and keep them in good operation. So we will need to do much work on maintenance and repair of the existing facilities, roads, pipes, landscaping, and the renovation of old housing buildings in the cities. But that's one side of the thing. Another thing is that with the government extensive aid on the countryside, on the rural people, the countryside construction is now booming, and there are many new light jobs to be done in the countryside. And in the past, the people will do them manually, but they are now with their upgraded income and with the new generation of the laborers, and mostly manual laborers now replaced by machines, and they would actually use machines instead of manual laboring. So it's a combined reason to drive the sales of the mini excavators. And another very important reason is the very fast falling price of the machine. It's almost half in 3 years of a mini excavator. So this made the machines much more affordable for many buyers who might consider renting or out-contracted their jobs. So they think now I can buy a machine at a very much smaller price, so I can afford that, and I can keep it for my use, and I also can do for others with a much smaller investment to buy a machine. So that's encouraged the sales of the compact equipment. So but with this drive, the market has been overdrawn, we believe, for the time being, because all the distributors decide it's very hard to make any profit from selling mini excavators now.
Mm-hmm. Yes.
Because of very thin margin on our sales. Yeah.
It's that old problem that you talked about in your presentation of the tendency in China to chase market share and to chase volumes, and not necessarily a healthy thing for the industry.
Yeah, that's right. It's a game that when you have seen the price is falling and you suffer from the very big margin, and you have to increase the volume if you want to make profit, or you want to avoid any losses from your production. You have to increase the volume, but to increase volume, you have to reduce the price for competition. So it's now a very painful game actually in the market, and we already see the manufacturers they increase their sales volumes, but they suffered smaller margins from in the business.
Mm-hmm. Interesting times. Well, thank you very much for your thoughts there, Xiang. That's been great and most illuminating. Thank you very much.
Thank you.
So a deep dive into the Chinese market there. As I said at the start, if you have any questions on any of the material, please do post them in the Q&A box, and we're already seeing one or two on the Chinese market, so we'll try and get them at the end. So on to our next speaker. Samir Bansal has nearly 35 years experience in the construction equipment industry in a variety of areas, including manufacturing, procurement, marketing and sales, and consulting. He's worked for a variety of companies, including OEMs and dealers in the construction equipment industry. And he joined Off-Highway Research when the company established its India office in New Delhi at the end of 2007. And as general manager, he heads the company's operations in the country. So let's get Samir up.
I'm going to talk about the India and Indian market, how it's doing, and what are the things we can look forward to in the Indian market. India is a developing economy, and it's about $2.87 trillion economy and fifth largest in the world. The market was very small, at the start of the millennia, but it's been growing thereafter and peaked in 2018. However, it could not sustain its growth and declined for the last 2 years. First, in 2019, there was a general election in the country, and along with that, the GDP growth was also slowing down. So put together, that pulled down the construction equipment market, and the market declined by about 15% in 2019. However, at the start of 2020, the market had started recovering and was doing well in the beginning of the year in January and February. But with the advent of COVID-19 and the subsequent lockdown, the economy did fall down. So, I mean, that led to a further downturn of concession equipment sales of about 12%. So 2 years, they have been, like I said, 2 years the market has been declining, but there is a lot of planned growth, a lot of planned investment in infrastructure that is there, and about $111 trillion investment until 2024 has been planned. If we talk about historically, like I said earlier, the market was less than 10,000 units in 2002. And when the government started focusing on infrastructure building, the market started growing rapidly and grew to about 37,000 units by 2007. However, and with the change in the government in 2015, the government again started focusing on the infrastructure development, looking at all the bottlenecks, facilitating and streamlining all the issues so that the growth occurs again. And that resulted in the market growing rapidly from 2016 to 2018, when it peaked at over 80,000 units. However, there were issues that there were election in 2019, the GDP growth also started slowing down, and that resulted in a dip of about 15% in 2019. Again, as the usual case, the market started recovering in January, February last year, but the COVID hit the economy and it went down. So here, if you look at the gray line here, that shows what the forecast was before COVID hit the country and before lockdown was imposed. So a growth of about 12% was expected in 2020, and subsequently it would have grown steadily until 2024. 24, and when there dip was expected. However, instead of a growth of 12%, there was a dip of 12% in 2020 because of COVID, which, frankly speaking, is a very moderated effect. I mean, initially, everyone expected the market would go down on an annual basis by about 30%. However, from the middle of the year, we started seeing signs of recovery and the market started growing thereon. Month on month, every month, to reach about, for all major equipment, reach about peak levels by the end of the year. Look at the structure of the market. India is a backloader market. It has traditionally constituted from about 38% to 54%. It has varied. Currently, last year, backloaders accounted for about 52% of the construction equipment market. The popularity of backloader is primarily because it is the cheapest one of the cheapest equipment in the country. It's a big machine, but still it's the first choice equipment for any contractor or any operator planning to become a contractor. So this is the first machine he buys. It is also allowed to move on road on its own power. So it's a mobile equipment, and that is why it's very popular with rental and plant hirers who buy the machine, drive from one side to another looking for jobs. So that is one of the reasons for the popularity of backhoe and it's being a utility equipment. It is used. However, the use of specialist equipment are also becoming popular, and in the long run, we believe the crawler excavator should grow more rapidly compared to backhoe loaders. Going forward by 2025, we expect backhoe loader to constitute about 42% of the market, and a crawler excavator is about 32%, about 30%, sorry. Other major equipment is mobile crane, which constitute about 10% of market. The road sector has been a prime driver for construction equipment in the country since last 5 to 6 years, because they that is one sector that is uh, most visible and has immediate impact on the economic prospects. So that is why the government. But however, even going forward, we still expect backhoe loader to remain as the largest selling equipment in the country, followed by excavators and mobile cranes. This is happening till the next 5 years. That is our forecast for the market. In terms of, if you look at the production, India, almost all the machines that were produced in the country in early part of the millennium were consumed within the country, and there were hardly any exports. Imports was a large share, and sales were always used to be higher than production, local production. And this continued till about 2011, when there were sizable imports were there, and exports were negligible. However, things started changing from 2012, when a lot of companies started focusing on exports. And from there on, you find that production has always been higher, and the share of exports to total production has remained at about 12% during the last 5 years. Although in terms of numbers, exports grew from 2012. Exports grew from 2014 to 2018 steadily, and a decline was witnessed thereon. First, because of the global demand, lower global demand, and subsequently because of COVID. If you look at, in summary, like I said, demand peaked in 2018. There was a disruption in election in 2019. Again, economy was slowing down, economic growth was slowing down. Uh, there were lot of issues, which in terms of all the funding and the fund availability and restriction because of inflation, plus all the reforms that were being undertaken by the government, like banking reforms, demonetization, GST. So all these will pay dividends in the long term. However, in the short term, they would have pain, and they would result in a slowdown in economic growth. However, going forward, government is focusing on a lot of infrastructure development. Like I said, 19 there was a decline. There was further decline because of 2020 due to COVID. Actually, 12% year on year, or 25% was a peak in 2018. But like I said earlier, in the middle of the year, everyone was expecting the market would go down by 30 to 40%, which never happened, and the market bounced back very quickly. A lot of investment, infrastructure investments has been planned, and the projects have been formulated and identified with yearly investments have been outlined, and the outlay has been finalized. What kind of investment? Like I said, $111 trillion investment in 6 years has been planned. Going forward, backhoe loader would still remain the most popular equipment. However, it might see a certain dip this year. Primarily because there is new emission norms are getting implemented from April. So the change from BS3 norms to CEV4 or Tier 4 level, that would basically impact the pricing. Everyone is ready with the equipment, but the pricing will go up, which may result in a temporary dip. But going forward, that should even out during the year. So on an annual basis, it will not affect the demand because work has to be done and construction would continue. So that is the only dip. So this would apply to all wheel equipment, which would include motor graders, backhoe loaders, compaction equipment, wheel loaders. But however, the demand should even out during the year, and we expect all equipment to continue growing. Crawler excavators, obviously, like I said earlier, we believe crawler excavator demand would increase, and it will probably grow at the highest rate amongst major equipment, and it would constitute about 30% of the total construction demand by 2025. And like I said, all manufacturers are setting up the facilities, either expanding capacities or setting up new facilities.
Well, thank you very much for your presentation, Samir. One of the things I wondered about was the construction activity. Historically, there's been a lot of growth for the construction equipment market from road building in particular. So I wondered if that was spreading out a little bit and whether you're seeing more investment come in different types of infrastructure.
Chris, I mean, road infrastructure is probably the most visible and what has the largest impact on the construction equipment market. But there is work going on in almost every infrastructure sector, be it railways with the dedicated road, freight corridors, airports, ports, urban infrastructure with the smart cities and sanitation, rural infrastructure with water conservation, irrigation, housing for all. So there's kind of all around projects are planned, construction activity is going on. And especially, I mean, if recently, I think the government has signed agreements for river linking, which is a big project which will require a lot of construction equipment going forward in the future. And it's a Ken and Betwa rivers in the two states of Uttar Pradesh and Madhya Pradesh, central India. So the linking of those rivers, they would require a lot of equipment. So basically, they're building canals of linking two rivers for water conservation. And the government has a huge plan going forward. This is the first of the projects. The railways, you have high-speed corridors. I mean, first one again is just about to take off between Mumbai and Ahmedabad. So plus more dedicated freight corridors and doubling of lines, and a lot of projects are involved.
Thanks, Samir. That's very interesting. I think when you see the projects that are happening and coming forward, it really underlines why we're so optimistic long term about the Indian equipment industry. I think moving on from that, certainly something that we've seen in the last 10 to 15 years is a lot of new factories being built in India to manufacture construction equipment. How is that developing India itself as a bit of a regional hub for construction equipment to serve surrounding countries as well as the domestic market?
Yes, India is a high potential market, and for that reason, I think most international manufacturers of construction equipment are already present in the country. Almost everyone has a manufacturing facility in India, and with the new ones such as XCMG or Zoomline, the Chinese manufacturers, they are also setting up their facilities. Sany has a factory, Lugong has a factory, even that amongst Chinese manufacturers. And most of the other international manufacturers already have their facilities. They are expanding their capacities or setting up new facilities. Now, one is the catering to the local market, which has a big potential. In addition to that, India has its geographic location, its political connections. I mean, it's acceptable for almost every country in the neighborhood or anywhere. I mean, there's no embargo anywhere from exports from India. Logistically speaking, it is good. Language, it's English is the business language, and it's widely understood. So communication is not a problem. Technical skills are there. You have a well-established vendor base. So all the things work out well for manufacturing in India, and cost is still much lower. So I mean, these are things. That's where all the facility, till, like I said in my presentation also, till about 2012, there were very little exports. But since then, exports has been growing. Every manufacturer is looking at domestic as well as exports opportunities. Government is also promoting local manufacture with their Make in India programs and other programs. All the states are competing with each other for inviting investments. So all these factors, that is why, I mean, I say it's become already a regional hub in the sense that most of the neighboring countries are controlled from the Indian offices only already, and further opportunities will grow. So that is the reason we are saying it is increasingly becoming a regional export hub.
That's great, Samir. Thank you very much. So very, very positive times ahead for the Indian construction equipment industry. Thanks for joining us.
Thanks, Chris.
So some great insights from Samir there, and Samir is also joining us for the Q&A at the end of the formal presentations, which is fortunate because we've had a few questions in about India while that presentation was playing. So having looked at the two major emerging markets, I'm now going to take you through the situation and outlook in the two key developed regions, Western Europe and North America. So here we are in Europe, and the situation really is that we're recovering from the problems of 2020. This is showing the sales and our forecast over quite a long time period. So it shows the cyclical nature and the very difficult time 10 or more years ago following the financial crisis. The peak we reached in 2019, and the downturn there was about 16%. So slightly worse than the average we saw in the world excluding China, but not the 30% that we thought it might be this time last year. And again, as we've seen in quite a few other markets, the level that it fell to was really not that bad, still above the 10-year average at 150,000 units. And then with a modest rebound coming, we do see the market staying at quite good levels. If you dig into the individual markets, you do see an awful lot of variation, as you always do in Europe. What we have in red here is the impact we saw in 2020 because of COVID, and in 2021, our forecast for the future. So at the top of this chart, you see Italy, which had almost no impact at all, which was surprising given that was one of the first countries in Europe to go into lockdown and one of the first and worst hit by the health crisis. But Italy is in a different place to other markets in Europe. It's in a growth cycle and it hadn't yet reached its peak. So that is very clearly resumed. And also relatively mildly affected with Switzerland. Switzerland is quite a stable market anyway. And then you have some bigger impacts here, but if you think that the European average is here around 16% and the global average is here around 12%, you could say that Germany, for example, which is the biggest market in Europe, the impact was fairly mild. And then the bottom half of this chart is obviously showing the countries with some of the more serious impacts. Unfortunately, that does include some big markets, France, and then at the bottom, the UK and Ireland and Spain. So that kind of gives you the picture of what we saw last year. Looking ahead to this year, there is something to be said for the worse the impact was, the more sort of stark the rebound will be this year. You have a few that didn't fall too badly, but should bounce back quite well. And obviously Italy stands out there. But just a quick point to make, having fallen such a long way, a big-ish rebound probably doesn't leave these markets in as good a place as they might be. There's still more growth to go before they come back to good health. Whereas up here, if you look at somewhere like Germany, which had reached an extraordinary peak, yes, it fell last year and it'll fall again this year, but it's still, volumes are quite good. So it does need a bit of careful inspection market by market. Just because a market is not going to grow this year doesn't necessarily mean it's in trouble. And just because there's really strong growth this year doesn't mean that everything's all right again. The composition of the European market, again, this is over quite a long time scale, but this has changed over time with traditional products like backhoe loaders and skid steer loaders falling out of favour. And the volume products are the various types of excavator, wheeled, crawler and mini, varying between wheeled and crawler from market to market a little bit. Wheel loaders are fairly enduringly popular, and telescopic handlers have also picked up a bit. One of the things we saw last year was that the compact equipment didn't fall as far, and the effect was fairly mild on mini excavators. So the relative share of mini excavators did tick up, and it tended to be the big ticket items that saw the more severe falls. And just a quick word on production and sales. Historically, Europe has had higher production than sales. It's served export markets, particularly in the Middle East and Africa. Bit of a strange time, obviously, in 2008 and 2009. And then since we've come back from that difficult period, you've seen the gap progressively close between production and sales. Two things have been at play here. One is a lot of the international OEMs have served emerging markets from the factories that they now have in China and to a lesser extent India. And we've also seen a certain amount of retrenchment in the global industry with a number of factory closures in Europe by the international OEMs. So last year, for the first time in a decade, sales were ahead of production. Now, obviously, it was an extraordinary year for all the wrong reasons, and there was a lot of production disruption. So that doesn't necessarily mean that the balance has tipped and Europe is now a net importer. We'll have to see how 2021 shapes up. But nevertheless, the trend has been moving that way with greater activity in China and a certain adjustment of the global footprints. So just in summary, the decline wasn't as bad as it could have been, and the volumes are still good, and the bounce back will keep them at those good levels this year and next. The retrenchment, again, I've just talked about, and there is a question about whether there will be continued flight of production from Europe. And the other thing I haven't really touched on is the B word. Obviously, there are concerns about the general economic situation in the UK and Ireland, having been among the worst hit countries by the COVID pandemic and reeling from all the economic impacts of Brexit. I think you have to say there are some longish term concerns over the health of those markets and how they'll shape up over the coming years. Moving now to North America, we're forecasting quite a robust recovery. And again, this illustrates it. Again, from the low point of the global financial crisis, the growth has been very, very strong and almost continuous. The downturn last year was very similar to Europe, about 16%. The expectation is that it will bounce back to those peak levels that were seen in 2018 and 2019. And then moving ahead, it is expected to go on to a new high. A couple of reasons for that. The first is the stimulus spending, which has been approved in recent weeks, should provide a very big boost to construction. There is a clear emphasis on construction in that. Secondly, the residential market in the US really came roaring back mid-year and looks particularly strong. And also we're seeing new types of equipment coming to the fore that are kind of creating new applications and making the market a bit bigger. And this illustrates that, you know, the real growth story over the last 10 years has been the compact track loader. Historically, the US as North America rather has used a lot of skid steer loaders. And as compact track loaders emerged as the same sort of machine but a different undercarriage, they've obviously replaced skid steer loaders to a great extent. But because they're able to operate on different and more difficult types of terrain, there is a sense that they've kind of created new applications, if you like, and that areas that weren't mechanized or didn't use construction equipment now do. At the same time, over that longish time period, you have seen big growth in mini excavators. To a certain extent, these have replaced backhoe loaders, of course. But again, you know, there is a sense that there's been sort of new markets developed. So the emergence and acceptance of new equipment types in the North American market is one of the reasons that we see a sort of a long-term growth and a new high being scaled there. In terms of production and sales, if you go back to the 90s, North America was fairly balanced in terms of production and sales. as mini excavator sales picked up, it turned into a net importer with sales ahead of production, and that's because a lot of those mini excavators are made in Japan and imported to the US. That has continued as mini excavators have grown in popularity, and also compact track loaders. Although a lot of compact track loaders are made in the US, there are also quite a few that are made in Japan and imported to the US. So even though, you know, spiritually the compact track loader is an American machine, it is also being imported to North America. So just in summary, the downturn, again, 16% wasn't as bad as we thought initially, and the volumes have remained good. There was a great boost for compact equipment last year from that strong residential activity. And on top of that, we see this longer term trend of compact track loaders sort of mechanizing new areas. We do see the potential for a strong rebound thanks to the stimulus spending and the residential market. So now moving to the global outlook, what do we see this year and what do we see further ahead? The demand is clearly strong. I think the question really is whether the industry can supply it, and we'll dig into that in a little bit more detail. Beyond that, we have a forecast, but obviously you're in an area where it is very difficult to forecast because it's really all about the policy response to the pandemic and what governments do. There will also be some societal changes which we also feel will have an impact. So again, that's something that we're kind of keeping an eye on. And the other point which I'll just touch on, but I think is interesting and worth pondering, is because the peak in the market has been extended, we're actually getting quite significant growth in machine populations. And there's a question about, will that be a problem when a downturn finally comes? So just looking at our forecast, which is kind of the first slide I showed, here we are in the forecast area. As I said, 2021, we do have the potential for record sales. And thereafter, the Chinese market here shown in red will fall away a little bit, but other markets will come up. Obviously, North America is the most dominant, we feel. So that will keep the market at quite a high level. So again, this is the point I was making about the prolonged peak and that building a population. You know, previously we're expecting something of a downturn, so there are sort of more machines in the market than perhaps were expected. So the outlook for 2021, we do expect stimulus to be fairly widespread, and you know, that's good news. If it's spent on construction, it would tend to be in infrastructure. That's where public construction, the money normally goes, and that is the most important end market for construction equipment sales. I didn't go into this that much, but our analysis of what the international OEMs do does point to an incredibly strong forward order position. Not all OEMs report their orders, but those who do, we're seeing the highest book-to-bill ratio that we've seen for a decade. So that is very striking. And as I said, record sales are possible this year. The concern is clearly the component and material supply constraints. You know, I think the first point to make is whenever you're at this kind of level of 1 million plus units, something is strained. You know, it doesn't matter what it is, and it's different every time, whether it's tires or hydraulics or whatever. We're at a level where supply is a bit of an issue. On top of that, industry is still ramping up after the slowdown of last year. And add to that the fact that all the inventory was kind of emptied out in 2020. It's obviously very, very difficult for that whole supply chain to suddenly kind of leap back into action and react to the demand it's seeing. And the point is, you know, 99.9% of it could be on the game, but you know, if there's one thing that you don't have that you need for a finished machine, then you have a problem. And that's kind of the issue with such a big global ecosystem like construction equipment supply chains. You know, it just takes one boat to get stuck in the Suez Canal and the world has a problem. And looking at 2022 and beyond, you know, when all the business support and the job protection goes, you have to question how strong the global industry will be. The positive, I think, is interest rates will be super low, but we haven't really felt the economic impact of COVID yet, because there's been all this support, and it really it waits to see you know, what happens when the tide goes out and who's wearing a bathing costume and who isn't. Then you clearly will have stimulus. There's a question of how long it will last, but also how well it will be done. I mean, in China, the last time around 10 years ago, the stimulus was enormous, but possibly too much and certainly too quickly. And then when it fell away, a perfect boom and bust had been created. And then in the rest of the world, really, it didn't do enough. It didn't do it quick enough. And then it suddenly got tired of it very quickly and moved too quickly to austerity mode. And that's why it had that long period of weakness, or one of the key reasons in the early 2010s. And obviously it's illegal to give a webinar these days without saying the new normal, but this does have a bearing. The question about how society has changed in the last year and how those changes may stick. Will we travel as much? You know, probably not. We can do our business over video to a certain extent, although it's far from perfect. But then do you need, you know, as many airports, hotels, restaurants, bars and restaurants? Will we go back to our offices to the same extent? You know, probably not. So then do you need these office buildings? Do you need commuter infrastructure? Not as much. And the point is that if you don't need the structures as much, they don't get renewed, there's less construction, and that obviously knocks on to the need for construction equipment. Now, in most of these types of structures, non-residential building is not as critical for the type of earth moving and road building equipment that we covered off-highway research, but it does have an impact, and it also has an impact on other types of construction equipment which are outside our coverage. The final point I want to make is, as I mentioned earlier, just about global population estimates. This is something, and I would stress estimate, this is something that we build from our database of sales based on the average lifespan of equipment. It's different for every different equipment type and different markets. So you're obviously dealing with a lot of variables. But if you do the maths or let Excel do the maths, you do see this effect that because since 2018 we've had sort of quite a high level, and we see that level remaining for the next 5 years, we've already seen a build-up of construction equipment in the population. It's just gone over about 7 million units for the first time. And if our forecasts do come through, we see it rising to about 8 million units. And obviously, you know, the kind of the high volume machines are the ones they'll be the major components of that. But you know, you also see other machine types such as dump trucks, which are lower volume but relatively long lived. So yes, you know, what does that mean? You have this prolonged peak, and already we've seen the population increase by about 10%, and as I said, it could go up to 8 million units. You compare that to the population of machines in the world in the 2010s, 6 to 6.5 million units. So that's obviously a very, very big difference. It has to be said, you know, this is a global thing, and obviously there are pockets where there are maybe excess machines and pockets where there aren't. But the point remains that, you know, do you therefore have too much equipment around when the downturn comes? And it will come. When construction activity tapers away, those machines could be a barrier to new equipment sales. So, you know, I don't want to be alarmist or raise a warning that may not come to pass, but I think it is striking that we've had this peak for a very long time, and it is something unusual, and it's something that the industry will probably have to deal with. So with that, we'll come back in. Just fire up my video again. There we go. And I see plenty of questions in the chat channel. I also see we're joined by Samir. So Samir, if you could start your camera and unmute yourself. There are a few questions on India, so if you can help, that would be great. I'll try and go through these in order. We're already at time, but we'll come through these as quickly as we can. The first question was about the Chinese market. Why mini excavator growth outperformed the overall market. You know, I think we covered that. We've seen a lot of things become mechanized in rural construction, agriculture, and we've also seen a lot of repair and maintenance work coming to the fore in China. So I think that probably explains where that's come from. Another question about China, about electrification. How is it progressing in China? Yeah, it's an interesting one. We had an article on this in one of our recent Chinese service market reports. What we're seeing is many of the Chinese OEMs do have products that are just starting to come onto the market. It's probably quite a similar situation to what we see in Europe, with one or two just starting to release machines commercially, and certainly quite a few people ready to do so. So at the moment, it seems to be at a very similar stage. It's mostly mini excavators or compact excavators that have been targeted. And obviously, China is now the biggest mini excavator market in the world. So it does have the potential to gather a lot of momentum as the time goes on. Samir, are you there? The next question is India.
Yeah, I'm there. I mean, it's just that my video you need to switch on.
Okay, no worries, we can hear you. The question about, well, two questions about India. One is if there's sufficient liquidity for growth, and also whether there's support from the Indian government for electrification of equipment, or whether other energy sources like natural gas and hydrogen are popular or likely to come to the fore.
Okay, so there is support for the equipment. I mean, enough liquidity. Yes, that will always be an issue, but government has planned. I mean, like NIP has 111 trillion. They have been planned, and every yearly split has been given. So government is working on that. That there should be enough liquidity, even if a fraction of this investment comes through, we will still have a great equipment demand. And as regards electrification, yes, the focus of the government is currently first on the auto sector. So that is the infrastructure for charging infrastructure for the auto sector. So be it cars, two-wheelers, e-rickshaws. So there's a lot of focus there. As far as construction equipment is concerned, I mean, mobile gensets is one sector where electric gensets are becoming popular. But I think that's still some way off for construction equipment. But focus is there. Government focus is there. Even for the auto sector, like the government has a target for all vehicles to be electric by 2030. So that's a very ambitious target the government has in India.
Wow, very interesting. Thank you very much, Samir. Another question on India. Is India competitive in exports against China? I think one of the things I would say about that, just before Samir jumps in on that, is one of the things you see in India is most of the international OEMs have a factory there, and the market is dominated by international OEMs, although there are indigenous ones. And the companies that have a factory in India also tend to have a factory in China. So, I mean, the answer is yes, and it's more a question of individual industrial policy for each of those manufacturers about what they supply from each factory. And certainly with the scale of backhoe loader production in India, you certainly see a lot of backhoe loaders exported from India. What are your thoughts on that one, Samir?
In addition to backhoe loaders, I mean, you have certain equipment like compaction equipment. I think India is one of the cheapest markets, and lots of compactors do get exported from here. Then you have rigid dump trucks as well, skid steer loaders, even excavators. Also, India is probably the cheapest market, and the pricing for excavators, India is the cheapest in the world. So, I mean, all these equipment, I mean, India will be competitive against China in that sense. So things look forward. Not every equipment, I mean, it may not be competitive, say for wheel loaders. Wheel loaders, China will have an edge, but other equipment, there are equipment which, and things like pick and carry, the low cost pick and carry cranes, that's another equipment that's exported from here, especially to African and Middle Eastern countries.
Excellent, Samir. Lots of success stories, but keep working on the wheel loaders. I have a question actually about exports from China. It'd be interesting to hear how the export has been developed 2018, 2019, 2020, and expectations for the future. So exports from China, I think it was touched on in one of the slides. That was a record volume last year, 82,000 machines, I think, or 14% of production. So, I mean, that does say a lot about the kind of capacity that there is in China and its ability not only to meet that huge domestic demand, but also to export record volumes. And that level of exports has been creeping up over the last 3 or 4 years. Yeah, so going forward, it is interesting. I mean, at the moment, clearly a lot of the OEMs in China are very much focused on their domestic market. As that falls away, I think you'll probably see an increased focus on export markets. So the volume would probably creep up with time, and certainly exports as a percentage of total production would creep up. Let's see what else we have here. Quick question about Europe. The biggest reason for the negative forecast for Germany this year. Yeah, sure. So in 2019, the volume of equipment sold in Germany was the highest it has ever been. So higher even than during the immediate aftermath of the reunification boom in the early 1990s. And we simply feel that the market in Germany is pretty much saturated. So again, yes, we are expecting a further decline in Germany this year, but that's not really to say that the market is in a bad place. It's just one of those things where, you know, arguably overheated, and it just kind of needs to get back to normal. Let's see, what else have we got? There have been quite a few questions about the availability of the slides and the recording following this webinar. Just to be clear on that, we will be emailing out a link when the recording of the webinar is available, and that's exclusive to you as attendees. The slides are available now, so if you can hang on a day or two, you'll get that link. But if it's something that you need urgently, just email me directly, chris.slight@offhighwayresearch.com, and I'll be very pleased to send them to you. But if you can hang on, you'll get them with the video download at the same time. Here's another one. Semiconductor shortage for engine manufacturing might shrink the total industry growth in 2021, or is there a quick recovery expected in the second half of 2021? Yeah, that's an extremely good question. Frankly, it's not one that we really have the answer to. The shortage of semiconductors in the engine industry is something that has really only come to light in the last few weeks. Those companies that are experiencing it have talked more about it being a problem in the on-highway world, and I'm not aware of anyone citing it as a problem in the off-highway world, but you're talking about similar components and similar engines, so you would expect it to have a knock-on effect at some point. Frankly, we don't know. We'll just have to see how it shakes out. I think, as I said when I was discussing these supply shortages, you know, it's always something, and it's always different every time. I remember in the 2000s, a big problem was shortage of large tires for sales of dump trucks. Obviously, in recent years, there's been issues around hydraulic components. So yeah, it may well be that those issues are not so serious now, and semiconductors could be the problem this time around. So at the moment, we're not entirely clear where the bottleneck lays exactly, but it is very clear that there are constraints down the supply chain. Let's see what else we have in the question channel. I think we have time for one more. One final question about the Chinese market. The Chinese market is obviously very strong. To what extent is this dominated by Chinese OEMs, and what European or North American OEMs are making inroads there? So the first thing about China is, to sell equipment in China, you need to manufacture equipment in China. There was a time when there were imports, but demand now is filled almost entirely from domestic production in China. If you dig into those figures, you'll see that the indigenous Chinese OEMs supply about 75 to 80% of demand, although that does include 1 or 2 joint ventures and wholly owned enterprises that are owned by international manufacturers. And the areas where international OEMs participate are limited and getting a little bit squeezed now. It tends to be mostly in the heavier excavator classes. So yes, there is a bit of a squeeze going on, and that has increased as indigenous Chinese manufacturers have developed their own excavators. It seems relatively stable, I would say, but yeah, as Xiang said in his presentation, there are lots of pressures, lots of price pressures in China, and it's not the easiest place to be an OEM. So thank you for that question. I think we better call a halt there. We've gone over time a little bit, so thank you. I see from the list of participants, most people have stuck with us, so we do appreciate that. I'm sorry I haven't been able to get to all the questions. As I said, if you have any follow-ups or if you'd like the slides immediately, do feel free to email me directly, chris.slight@offhighwayresearch.com. So just by way of closing, thank you again to all you for attending. Your support is very much appreciated. Thank you for investing your time and money. I hope you found it fruitful. Again, a very big thank you to our supporters, Carlisle and OSA. They've really been great partners for this and helped us make this webinar possible, so thank you. And of course to our supporting publications, International Construction, Diesel Progress and Diesel Progress International. We certainly plan to hold more webinars in 2021, and one day when we can, we hope to hold in-person events again. So do please keep an eye on our news pages for news of that. As I said, we'll be in contact with links to download the slides, the video, and a report following this. So thank you very much for your attention, and I hope you stay safe and well wherever you are in the world. Thank you.